Thanks to Manoj for that. And remember, stay in touch with us. Be the Revival is the hashtag to use. You can reach India Inc. on Twitter as well. Now, in the sessions we've just held, we looked at India's attractiveness for foreign direct investment. We've also looked at the attractiveness of the equity markets. But is the same true for other areas, private equity and venture capital? Can India offer a better return than elsewhere? And if so, how? If not, what is holding that back? So in our next panel, we're going to look at exactly that. And to discuss it with his guest, please welcome Rahul Agarwal, who is the co-head of Financial Investors Initiative at Invest in India. Rahul, good to see you. Good afternoon, good evening to you. Please introduce your panel and I'll speak to you a little later.
I welcome you all to this amazing panel. There has been tremendous growth in private equity and VC investments in India in last few years, and the last year numbers were close to $40 billion. Can you all share your thoughts on what have been the micro highlighting factors behind this growth, and what are your expectations for the future? Nikhil, we can start from you on that one.
Sure. So I think from a historical perspective, volume of private equity has grown. Helped by global liquidity and the inability of other domestic sources of capital to keep pace with a growing economy. Also, I feel like growth has been strong, but heavily concentrated in deals greater than $100 million. PE firms have learned from their past experience and shifted to buyouts, where they can deploy more capital and control the destiny, both in terms of value creation and technique. And lastly, from a historical perspective, most PE firms have been focused on a few sectors. IT, BPO, healthcare, financial services, and consumer deals have been the best performers. As far as future expectations are concerned, at a high level, companies need capital due to COVID-driven economic dislocation, and PE firms are sitting on a lot of dry powder. Therefore, you would expect to see a fair bit of M&A activity. However, initially, my view is you'll see a slowdown in M&A as investors get their arms around the current macro and promoters come to terms with lower valuation. Thereafter, we'll see a significant pickup in capital deployment. I do think from a private equity perspective, this pitch promises to be a good one in terms of attractive risk reward.
Thank you, Nikhil. Those are very interesting thoughts. Krishnan, maybe I can bring you in about the non-equity part of the investments, how they've been performing and what are your views around that?
Sure. Thanks, Rahul. So I think if you look at the private credit market, the aspects are a little different from what Nikhil mentioned. It's still in some ways in the first stage of development versus private equity, which started in the late 90s. In the context of private credit, if you look at the numbers, India has had about $15 billion of investments in the past 5 years in aggregate. So that's just under 10% of total private capital. So it's not substantial, long way to go. As you know, in the West, post the GFC, there was a lot of need for private credit firms to come in as banks were pulling back. In India, we've frankly not seen that. We did have banks who had some issues. We had NBFCs who came in with some capital. But frankly, private credit is still, again, as I said, in the first innings, if you will. On the other side, if you look at real estate and infrastructure, there's obviously been significant growth in that space. Both have seen tremendous growth in the last few years. Infrastructure, as an example, in 2019, we saw over $15 billion of investment just in the year, which is much more than the cumulative investment in the past 5 years. So some good pockets, some bad pockets. But the interesting part, if you think about the overall context of India, is, to Nikhil's point, you've got strong nominal growth in GDP as an outlook. Separately, you've got real interest rates, which are positive. Both of these are different from the rest of the world. So that puts us in an interesting spot. Separately, when you think about the credit market specifically, because of tightness in liquidity, you are able to negotiate attractive covenants as a package, which is interesting. Banks and NBFCs, as I mentioned, are still struggling. So there is a need for capital as well. So from a demand-supply dynamics perspective, things are very attractive. And lastly, I'd say from our Indian market overall development perspective, the stage in which we are at the moment is still very early. What that means is that when you're an international investor, you can shape your own business model, you can create market segments, and for long-term investors with a significant perspective to create stuff which is net new, it does present an attractive opportunity.
Thanks, Krishnan. I think those are very exciting points, and I think infrastructure definitely needs a lot more capital. Probably the NBFCs also need a lot of it, right? We need almost about $1.5 trillion in infrastructure only. and all of those pipeline is already ready. So I think those are amazing thoughts. I think Rajan, I want to bring you in now. You've yourself personally done a lot of angel investments with a star there. What are your views around early stage technology? If you can cover that one in your macro highlighting factors for this.
Yeah, absolutely. Hi, everyone. Hope all of you are keeping safe wherever you are in the world. Look, the Indian early stage ecosystem has evolved dramatically over the last decade, right? So if you go back 10 years, 2010, India had a few thousand startups, both tech and non-tech startups. If you look at tech startups, we had less than 1,000 startups in 2010. If you come to 2019, we had over 40,000 startups in India. We had 0 unicorns in 2010. We have 30 unicorns at the end of 2019. And if you look at venture capital funding, there was less than $500 million a year in the year 2010. And 2019, we had $14.5 billion of venture capital that went into Indian startups, right? So it's been a dramatic change, and that's really been enabled by the rapid growth of the internet ecosystem, right? So we had, less than 80 million internet users in 2010. Today we have over 500 million internet users, actually close to 550 million internet users. Broadband was very expensive, virtually non-existent in 2010. Today we have the most affordable broadband in the world. We had no digital payments infrastructure. Today India is the most advanced digital payments ecosystem in the world, thanks to UPI and a lot of the government. All of this has really led to an extremely vibrant early stage venture ecosystem. But despite all the progress that we've made, our view, as an ecosystem, Rahul and team, is that we are still very much in the first inning. So if you play cricket, I assume at least half of you play cricket, and you think of building India's startup ecosystem as a 5-series test match, we have pretty much finished the first series, right? And we are beginning the second series. We're in the first match of the first day. So if you just fast forward 5 years, we're going to go from 30 unicorns to 100 unicorns. India will get to 1 billion connected users sometime between 2025 and 2027. And we're very confident that by 2030, you're going to see another 10x growth from here in terms of number of startups, number of billion-dollar companies that will get built, as well as the venture capital funding. So we're extremely excited about the ecosystem in India.
Thank you so much. I think that makes me very happy personally, right? So from 40 billion to $200 billion per annum, I think that's my personal thing while I'm in Invest India. Thank you so much for those wonderful words. Shailesh, I think you've done some brilliant amount of work, right? YouTube, Google Maps, and that list doesn't end. Can you throw some light on how do you think that entire ecosystem has emerged, where it can go from here? Some thoughts around that.
Yeah, so just to pick up on what Rajan was saying, when you think about technology investing from a growth perspective, and when you mentioned some of the products that I've worked with, we think a lot about scale. How do you achieve scale? And I think now the Indian ecosystem, the technology community, is poised to think about scaling. Rajan mentioned we have several unicorns. Obviously, we desire to have that number grow significantly. And the question is, how do we do that? Where does scale come from? And I think there's a great opportunity for India to continue to position itself as sort of the natural leader, if you will, of emerging markets. You're seeing it on the ground. A lot of founders, a lot of investors talking about Indian businesses having natural opportunities, not just in major markets in India, but in adjacent markets in Southeast Asia, in Bangladesh, in Africa, Latin America, and even some of the developed markets as well. And why is that? It's because the talent pool in the country is extremely strong. The technical fluency of the talent is very high. And so there is, sort of a logical belief that as these ideas become real businesses, and as they're well funded and they get the right advice and they start to scale, there's tremendous opportunity for them to scale within India, but also outside of India as well. And that's going to take some work. I think, to be honest, more surgical approach to markets, thinking clearly about which markets to pursue first and in what sequence is going to be an important journey for startups and investors over the next, really over the next decade.
Great. That's really amazing, Shailesh. I think I'll go from here to Nikhil. Nikhil, I think the world has been talking about that India can offer potentially better returns compared to similar investments in developed world, right? Logically also, India has been growing at 7% plus on an average number for last 2.5 decades. How do you think India fare when a global private equity VC investor evaluates their investment options around the world? So you can share some light on that one.
Sure. So I'll answer that question in two parts. I think part one is, why is India an attractive destination for foreign investors? I think there are three main reasons. Firstly, investors are focused on political stability. The current government has pushed through important economic reforms and continues to do so. I think secondly, as you said, India is the third largest economy in the world in terms of purchasing power parity. So it's a pretty large addressable market eventually. And then the third point is young demographics with a large middle class and spending power at an inflection point, which again, we as investors are pretty focused on. Part two is really what are the things to watch out for? And there, I think the front and center thing is currency depreciation versus USD, as a lot of the investors look for dollar return. I think secondly, slowdown in macro due to COVID, and prior to that, the credit crisis is something that is being playing in the back of folks' mind. And then ultimately, it's more a relative risk reward. If you ask me this question, let's say a year and a half ago, India was very attractive to folks. Today, global PE firms might find better risk reward in developed economies. But the fact of the matter is, firms with Asian pools of capital will not run into that issue. So on balance, in my view, India offers attractive risk-adjusted returns as the pros outweigh the cons.
That's really good. Mr. Krishnan, bringing you in, you've been looking at the credit markets in India very, very closely. What do you think are some of the constraints that really stop a global PE investor from investing in India? And, there has been significant growth on ease of doing business. We jumped from 142 to 63 this year. And then, all the reforms which have been done, during COVID times, they were path-breaking. Do you really think India is becoming an easier destination over the period of years for private equity and VC investors to park their capital?
Yes, so as you think about the broader picture, absolutely right. There are many different reforms, all of which broadly positive. Issues tend to go down to details if you want to scale further. So, and if you divide this into, for example, private equity to start with, in private equity, the details involve a few things. For example, banks in India are not permitted to fund LBOs. Right, you've got the famous Press Note 2 issue where you can't fund a downstream investment through credit. So what these mean is that as a private equity investor, your reliance is really on high growth as well as high margins to make your returns of 20+%. So which means that from an execution perspective, there is a significant emphasis on execution risk, which one needs to monitor a lot. Separately, when you look at it from the perspective of a credit point of view, on the credit side, the biggest issue is that international credit capital fundamentally has not been consistently welcome into India. You've got multiple routes. You've got the FPI route. You've got the VRR route. Then the Sarfazi Act gives collateral protection to specific domestic investors, not to international investors, and so on. Similarly, if you look at the distressed markets, while we have the IBC, international investors can't directly buy NPLs from banks as loans. You don't have prepackaged resolutions as of yet. You can do well with specialized commercial courts for resolution of insolvency proceedings and so on and so forth. So each segment has multiple details that one needs to focus on. If you look at a broader issue to talk about, I think fundamentally Indian regulation tends to be pro-cyclical. So you kind of fester bull markets, and when things actually slow down, regulations get tighter, which compound issues. So what that means is when you manage portfolio companies, you need to fundamentally capitalize portfolio companies very, very conservatively and watch you through to the exit. So the one need, if you will, is to rethink our risk architecture and regulatory architecture to manage through market cycles.
Okay. Those are interesting thoughts. I think so, and I think you kind of have also drawn down that we have to now also get into the details and resolve those some of those things. I think at a probably higher level we've done well, and that shows in the rankings. But then I think points very well taken. Thank you so much, Mr. Anandan. First of all, congratulations for closing 2 funds, $1.35 billion India Venture and Growth Fund. It's I've heard that it's the largest corpus by a blue chip Silicon Valley fund for the region. Is that correct? Right, so
we don't know whether it's the largest, but we are very, very fortunate and grateful to our LPs to have the opportunity to partner with incredible founders in the region. But thank you, Rahul.
Yeah, so I think just picking from there itself, there are a lot of reports which say that there's a lot of dry powder waiting to come into India. We are definitely underinvested, right? If you look at the share of GDP, global GDP, we are far less invested by funds in India. What steps do you think public and private sector should take in India to unlock these investments in the areas that require them the most? So I think you've already mentioned that we can do far more. It's just the first test which we are done with. If you can also probably have a broad vision there, you can add one more statement on that one. Really brilliant.
Yeah, I think, look, firstly, it's important to note that we're going to see, a very large number of very big technology and technology-enabled companies that will get built out of India over the next decade, right? If you take one sector, for instance, software as a service, right? 2 years ago, India had 0 SaaS, software as a service unicorns. Today, we have 5. Freshworks was the first, Druva was the second, iCertis is the third, right? And, it's very likely that we'll have several dozen, SaaS unicorns over the next 5, 6, 7 years. Because we are very good. I think Shailesh mentioned this. We have very strong software engineering talent. Over the last 30 years, we've built an IT services ecosystem where we know, we have talent that can do scale engineering. And thanks to the ecosystem that's been built now, we have, reasonably good quality product managers and so on and so forth. So that's just one sector, right? And then if you look at a domestic sector, if you look at EdTech, which is really, quite frankly, seen an extraordinary boom, actually thanks to COVID as well. Before COVID, we had 40 million Indian products. That number has doubled in the last 3 months. We more than doubled the number of Indian users who pay for online education products. And in fact, there are 18 EdTech unicorns in the world. And the most valuable EdTech unicorn in the world is Byju's. It's an Indian company, right? It's actually the only sub-segment or segment of internet startups where the most valuable private company in the world is actually an Indian company. So whether you look at EdTech, whether you look at digital health, whether you look at social commerce, we're just going to see an extraordinary amount of growth. Now, in terms of, I think things to do to unlock, I put them into sort of 3 categories, right? The first is we need to be able to list Indian companies internationally, right? So if you look at a country like Israel has 160 Israeli companies that are listed on NASDAQ. Only about 20% of them actually of those companies are listed also in Israel, right? So, and if you look at China, the numbers are even higher. Over the last decade, China has, listed over 350 companies outside of China and raised over 90 billion of primary capital. And if you look at the Chinese companies trading on NASDAQ today, they've got a combined market cap of $1.2 trillion, right? So I think as we think about, a lot of money has gone in, we've built a lot of companies. One thing obviously investors look for is, it's one thing to invest money, but you also need to, create exits. So enabling Indian companies to list directly internationally without having to list in India, right? Without a dual listing clause, I say is the number one and most important thing that we can do in the near term. And I'm really hoping, I know we've been talking about it for a while, that can happen. I think the second is to look at sort of 4 or 5 big sectors where we have potential, right? Education, agriculture, healthcare, 3 of them, insurance, lending, like let's say those 5 sectors, and look at what are the policy unlocks that could accelerate innovation, right? Each of those sectors, in my mind, is $1 trillion innovation sector, right, over the next decade. And each of them has between 3 and 5 policies. If they're unlocked, it's going to unleash this massive wave of innovation. And so that's the second thing we can do. And the third one really is making sure that, we make it easier to do business, right? I think it's wonderful that India has gone from 132 to somewhere in the 60s on ease of doing business, right? But it's important that we keep in mind we are India, right? There's only one number that should matter to us, and that is number 1. How do we become the number 1 place to do business in the world, right? And until we do that, our work shouldn't stop. So, because, and by the way, the reason that's important is it's still difficult to start a company in India, right? It's still difficult to do things. It's gotten much, much easier. I mean, I think I'm a huge I've been quite vocal about this, that Startup India has been an absolutely incredibly successful effort. I think the support that Indian government is providing to startup is tremendous, right? But imagine if we were the #1 place to do business. And I'm hoping that in the next 4 years, we'll get from number 64 to #1. So because that would not just help startups, but it would help all businesses, right? And therefore, anything that helps startups build their companies faster, better, helps investors.
Sure. Thank you so much. Thanks. Those are. So thank you so much. I think I'll bring Shailesh in quickly. I think, right, Shailesh, what are your views on technology investment? I think that's been a huge success. What do you think's facilitated that success, and what is the potential of the sector? If you can wrap it up in about a minute, that will be.
Well, yeah, I'll just go back to what I was saying earlier, and I think we would all agree. Investing in new businesses, value-creating businesses, starts and stops with people and the quality of the talent. And this is a country that has more talent in large volumes across the board than most markets in the world. The good news is it's largely still untapped. And so if we can do our jobs as investors, as curators of that talent, to create value and to scale businesses, both within India and outside of India, we'll see a tremendous opportunity unlocked, value unlocked for investors, for founders, for everyone involved. And I think there is a sense of inevitability about that opportunity in India, given the scale of the market, given all the opportunities that all the other panelists have mentioned here. So I'm extremely bullish. I think the next decade is going to be amazing.
Thank you so much, Shailesh. Just quickly, if you can tell us which theme you think is going to be outshining in next 3 to 5 years, just one single theme. Shailesh, maybe you can start with, what do you believe should be doing the best?
Yeah, I think enterprise software, SaaS software is a big one. I think it plays to India's strengths. It allows us to produce software to help enterprises around the world. It's not strictly India, it's India plus. And also we have talent that understands workflows, understands the problems of the enterprise. We've seen it in the IT services world. We continue to see it as we serve clients elsewhere. And there's the arbitrage opportunity to serve markets that are extremely lucrative in the developed world while building in India, which is relatively more affordable to do. So when you think about competing with large SaaS companies around the world, I think all of that presents tremendous advantage for India.
Sure. Thanks, Shailesh. Rajan, in one word, what do you think? Which sector will do the best?
Look, I'm excited about many sectors in India, right? We're just starting the second test in the series. So I would say digital health is one where we're going to see the same, if not even more innovation that we've seen in, let's say, in a space like payments, right? There's the Bharat Health Stack that is being developed, which could completely transform telemedicine, which was not legal in India, is legal as of 3 months ago. And whether it's telemedicine, whether it's remote health, whether it's digital fitness, whether it's mental wellness or AI in healthcare, I think all of these subsegments of health actually have a lot of potential. So I'd say digital health would be a segment that is going to create enormous opportunities over the next decade.
Thank you. Nikhil, what do you think? One theme.
I think one theme that will play out over the next 3 to 5 years is big will become bigger. High quality, large companies will grow faster in their respective markets because they'll attract disproportionate share of capital, attract best talent, and leverage their strong balance sheets to make strategic acquisitions.
Thank you so much. And Krishnan, last after you, which theme do you think is going to outshine?
Yeah, I hope that a serious distressed investing market frankly starts at some point in the next several years, maybe catalyzed by a big bad bang that the government can create.
Thanks. That's very close to me personally. We've already overshot by 3 minutes. Thank you so much. This was really amazing. Honestly, fitting you all in 30 minutes is, all of you amazing people in 30 minutes is just impossible. I just want to thank you, the panelists and all the audience, and wish you a very good day. I'll now pass on the control to Ben to come back and take control of this session. Thank you so much.
Thank you, Rahul.
Rahul, thank you so much. Really well navigated, just 30 minutes, but so many thoughts and contributions from those guests there. Really grateful for all of that. A really interesting session. Now, in the next one, we're going to talk about environmental concerns and whether the COVID crisis has derailed maybe recent efforts to cut emissions and to tackle climate change, whether that crisis has pushed all those requirements off course. It's a really important debate. We're going to have that next, so stay with us here on the A Stream. We'll be right back after this.